Every video in this course, up to this point, has taught you a concept on a chart that I already knew the answer to. I knew where the OB was. I knew where the FVG was. I knew the outcome. That is how you teach, but it is not how you trade. Today is different. This is a live chart. I am running the 7-step framework on a real pair, on today's structure, and I do not know where today's session closes. What I do know is the process, and the process is the same whether the trade works or not.
Before I touch this chart, I want to be clear about something. The goal of this video is not to show you a winning trade. The goal is to show you a complete, honest process. Some of the setups I find today will not trigger. Some may trigger and lose. That is normal. It is expected. A framework is not a prediction machine. A framework is a probability filter. If the process is right, the edge takes care of itself over time. Let's begin.
Step 1. Daily chart. HTF bias. I'm opening the daily time frame first. No other time frame exists for me right now. I'm looking at this chart and asking one question. What is the current structural phase? I can see a clear series of higher highs and higher lows. The last significant move was a bullish break of structure that occurred at this swing point here. That confirms my bias as bullish for this pair today. I will not be looking for shorts. I don't care how bearish a lower time frame candle looks. The daily bias is bullish, and that is the context I trade within. Step 2. Marking the discount zone. I'm drawing the swing from the most recent significant low to the current high on the daily. I mark my 50% equilibrium. Anything below this line is discount. I can see that price has recently retraced and is currently sitting just below the equilibrium. That puts it in the discount zone. This is a green light for step 2. I am in the right half of the range to be looking for longs. If price were in premium, I would close the chart and wait. Waiting is not inactivity. Waiting at the right level is the most disciplined trade you can make.
Step 3. Dropping to the 4-hour chart to find the SMC confluence zone. I'm looking within the area that corresponds to the daily discount zone on this chart. I can see a 4-hour order block here, the last bearish candle before the impulse that broke structure. And above it, partially overlapping, there is a fair value gap from this 3-candle sequence, the gap between the wick of the first candle and the wick of the third. These two zones are stacking at the same price level. That is the confluence I need to see. I'm marking both and noting the combined zone. Step 4. OTE check. I'm dropping the Fibonacci from the last 4-hour swing low to the swing high to see whether the confluence zone sits inside the 61.8 to 79% band. And it does. The bottom of the OB sits at approximately the 65% level. That means I have maximum confluence, daily discount, 4-hour OB, 4-hour FVG, and OTE alignment. 4 filters. I'm keeping this setup on my watch list. I do not enter now. I wait for step 5. Step 5. Waiting for the liquidity sweep. This is the step most traders skip. They see the zone, they see the OTE, and they enter immediately. But without the sweep, the smart money engineering phase is incomplete. I'm looking at the 4-hour chart for a minor swing high sitting just above my confluence zone, a cluster of buy-side liquidity that needs to be taken out before the reversal. I can see one here. Price has not swept it yet, so I wait. I set an alert at the swing high level and I walk away. This is the discipline the framework demands. The alert fired. Price has now swept the BSL. I can see the wick on the 4-hour candle that extended above the swing high and closed back below it. That is the sweep. The institutional engineering phase is now complete. Smart money has taken the buy-side liquidity and is now positioned to move down, into the OB zone below. I am now moving to the 15-minute chart. The sweep activates the setup. I am not in a trade yet. I am ready to look for confirmation. Step 6. 15-minute chart. Waiting for the confirmation candle. I'm now watching the 15-minute chart inside the OB zone. Price has entered the zone. I see one candle forming. It is still open. I do not act on an open candle. I wait. The candle closes. It is a small-bodied candle with a long lower wick. That is a pin bar. The wick extends to the lower boundary of the OB. The body closes back in the upper half of the candle's range. Both validation rules are met: wick length and close position. This is my entry trigger.
Step 7. Entry, stop, and target. I enter at the close of the pin bar. My stop goes below the pin bar low, not below the OB, not below a round number, below the candle. My target is the BSL cluster sitting at the previous 4-hour swing high, the same level that was swept coming down. In many cases, price returns to retest the liquidity pool above the sweep. That is my target. The risk is 18 pips. The target is 54 pips. That gives me a 3-to-1 risk reward. I set the trade and I leave it. No micromanagement until the 1R level is reached. Now let's talk about what we did not find today. I ran this same framework on 3 other pairs before this video. On the first pair, the daily structure was neutral, no clear bias. I moved on. On the second pair, the 4H had a valid OB but no FVG confluence. Medium probability only, below my threshold. On the third pair, the OB and FVG were present, the OTE was aligned, but the BSL sweep had not occurred yet. Alert set, no trade. Showing you what I pass on is as important as showing you what I take. Most sessions produce no trades. That is a good session, not a failed one. Now let's talk about the trade we entered. I moved my stop to break even when price hit 1R. That happened about 2 hours after entry. At the time of recording this video, the trade is still open. It has not yet reached the target. I do not know if it will, and that is the honest reality of this framework. You execute the process, you manage the risk, and then you wait. The market decides the outcome. Your job is to ensure that your decision-making was sound. If the process was right, the result is irrelevant to your development as a trader. Here is what today's session demonstrated about the framework. 1. The 7 steps are a complete decision system. No guesswork at any stage. 2. Most setups are filtered out before step 6. That is normal and healthy. 3. The confirmation candle is the last gate. Without it, no trade exists. 4. Honest analysis includes showing what you passed on. 5. The framework produces the same quality of decision whether the trade wins or loses. The process is the edge. The process is repeatable. Repeat it consistently for 3 months, and your equity curve will reflect it. The free resource for this video is the live review session template, a printable PDF that mirrors the format you just watched. It has 7 sections, 1 per step, with space to annotate your bias, your zone, your OTE check, your sweep status, and your confirmation candle for up to 4 pairs per session. Use it every day before the London Open, and you will systematize your analysis within 2 weeks. The link is in the description. Video 12 is the first trade journal review. We look at 5 completed trades, score each setup using the confluence scorecard, and identify what separates the high-quality entries from the average ones. That video goes live next. Link at the end of this video.